Okay, good morning. Today is September 22nd. It's about 9:42 a.m. The market has opened up maybe about 12 minutes ago, and I'm just giving it a chance to settle down a little bit. A lot of stuff has been happening. The Fed came out this week and said they are going to be staying higher for longer. The markets didn't like that, and we have had, some significant drops this week. So, looking at this chart, you'll see I always talk about, the 20-day moving average and sometimes the 50-day moving average. And we've seen that we have basically cut straight through the both of them. Okay. If we line this up to previous points, you can see that maybe around here, August 17th, it was around that level. At another time, June 26th, it was around that level. So we can either bounce off of this level, or we can cut through it and start heading down a little further. I don't think things are that bad, so I don't believe that we are going to go much further. And there is more of a distance to get back to the top. So if I take a look at the model here, right now I am about only 18% invested in TQQQ. And with the price being this low, I'm fine with adding another position, maybe to get it between the 20 to 30% range, because I'm still only going to be 61% exposed. So if the market goes down, I'm not going to go down as fast. But if it goes up, I will capture some of those returns and start working towards leading the market on the way up. So I had made a mistake a little earlier. I had moved some money from cash to the money market fund. Before today, because I knew that there was going to be an opportunity to buy something for $35.97, I moved about $5 back from the money market fund to this account. So now I'm going to go in and I am going to buy another lot of TQQQ. And the spreads, as I said, are always thin here, so I don't worry about limits or anything like that for now. So it's going to cost me $36.05 roughly. I move that money over. Okay, so now if I look at my portfolio, I'm only going to have, let's see here, $3.50 of cash, but I will have 11 of TQQQ. All right, so $3.50. The money market fund is what, 518.45. So that puts me at 20%. So I'm good if the range is somewhere between 20%. On the upside, I'll probably top out at 35%, but I'm good being at 20% here. Okay. So next week, what's going to be happening is that I have this CD that is maturing on Monday. So I am going to be getting roughly $1,000 plus some additional funds, and I have to figure out what I'm going to do with that. I am leaning more towards placing it in the money market fund. Another option is to maybe buy a shorter CD. Now it's at 5.5%, whereas my money market fund is what, 5.26%. So I may buy a 3-month CD, but I'm leaning more towards just dumping everything in here, just because I like seeing the dividends at the end of the month, and that kind of helps with performance as well. So at this point, the dividend is roughly about $2.31 a month. When I put that $1,000 in, it should basically triple that, and I should be getting about $7 a month. And that helps. It helps to visualize what is really happening, because since the CD is here, you don't really get a chance to see the 5.25% that I was making off of that and how that impacts the performance. So when we go to the performance here, let's get rid of this thing. You'll see that, right, the NASDAQ 100 is down minus 5.2%. S&P is minus 3.94%. I'm down minus 3.48%, but this doesn't include any of the interest from the money market and the CD as yet. It only shows up at the end of the month. Okay, so that's it for today. I don't know what's gonna happen in the next couple of days. I'm expecting somewhat of a small bounce, but I don't expect anything to skyrocket back up to the top. But I want to position myself so that I can start leading the NASDAQ 100 on the way back up. Okay, so that's it. Have a great weekend.